Hello and welcome to today's video. See, investing can be done. Anyone can do it. But can everyone become a seasoned investor? It's a big question. It looks easy. But no matter how easy or difficult they look like, they bring with them a sack full of challenges. In this video and in this series, I'll bring you all that it takes for you to become a seasoned investor in this investing world. When you were young, you started earning money. You enjoyed a lot with it. You enjoyed your first salary. You enjoyed the first rush of money that came your way. And then slowly, when life started moving on, you slowly started realizing the importance of investing. And then somehow you started putting in a little bit of money towards your investment plans, towards your future. You think, okay, fine, this is my money, this is what I have, this is what I'm saving, this is what I'm investing for my future. You started becoming a conservative investor. That's where you started conservatively putting in some little amount of money towards your retirement, towards your future goals, towards something which you wanted to perceive in life. You started saving some money. Now, just savings is not going to help you. You realize this at a point when you realize that your savings are not making enough more money. You realize that the savings that you have isn't going to give you enough backup to fulfill the dreams that you have for your life. Maybe you want to have a car, you want to have a house. The amount of money that you're saving is not going to be enough for that. That's when you started thinking of something else, and then the thought of becoming an investor pops in your mind. But in the investing world, you need to be aggressive and you need to take some risk. That's when you shift yourself from being a conservative saver to an aggressive investor or a risk taker. Now, most of us would agree that to be a smart investor, it would require you to play smart in the market and have a very long and successful investing journey. And at the same time, you would need various ways to generate income and put those income to multiply more and grow it. This is where it becomes very important to know yourself. Knowing yourself tells you where exactly you are at this point. Knowing yourself lets you know your liabilities, the capacity that you hold to be an investor. Are you on the right track? That's the prime importance factor. Without knowing yourself, if you just plunge into the market, if you just plunge into the investing world, you may be lost altogether. So the first step of being an investor or being on the path of being a seasoned investor is to know where you are, is to know where you're standing. Now, once you know yourself, you'll know where you're standing, you'll know the goals, you'll know the path. You can see the path in front of you. You can see clearly where exactly you want to go. You can see the path that you want to take to fulfill your goals, your dreams that you have for your life. Once you know yourself, you'll know the goals that you have set, the dreams that you have, the emotions that you have for yourself, the feelings that you have for the goals that you have set and for your family, and how all of these emotions they mesh with you, in your head with your investment plan. So to begin this journey, first get to the basics. Now, the investing world is big, the market is big, it is filled with terms and terminologies and investment terms, concepts, methodologies that are so unique, so vast that it sometimes goes beyond your imagination. You sometimes get confused in all those technical and investing terms that lay in front of you. If you look at the stock market from the top, it looks very daunting. It looks like it's a very daunting task. Truly, it does look like it's a very, very daunting task to complete. But the good thing is, You don't have to complete any course. You don't have to completely know the market. You don't have to completely understand all the terms, all those series of dictionaries that I was talking about, all those terminologies, methodologies to be in the market. You can start right away. You need to know the market completely to be in it. In fact, the problem is if you wait too long to understand and to know the market and then you would plunge into it to make some trades and make some profits, you would probably lose out on moments of good opportunities and miss out on potential gains because of the fear of your indecisiveness. See, the stock market is a great way to keep your wealth, grow it, keep your money safe, secured. It gives you the financial freedom. It gives you the safety and the comfort to remain in your retired life without falling short of your monthly expenses. It gives you that freedom. Yet, only 3% of the people in India, as of now, approximately around 3% of the Indian population is invested in the market. See, in an article from CNBC, it says that India could become the 5th largest market in this world in the next coming 5 years. And then it goes on to describe saying India's share in the stock market is expected to rise from 2.8% currently to 3.7% in the next 5 years. In fact, sadly, there was a survey conducted on people across the country which shows us that in India, people still feel and they still believe that the investment opportunities outside the stock market world are far, far better than putting their money in the stock market. And according to them, it still remains as their most favored way of investing. So what could be the reason? The reason could be like two things mainly. Firstly, the older generation, they would prefer to invest in real estates or fixed income instruments. And the younger generation has probably seen the downside of the market, be it the 2008 crash, the 2014-15 market downturn, 2020 hit, and then the Russia-Ukraine war, and all these things. They probably have seen a lot of down markets. That could be the reason why people are still forced to believe that any investment opportunity outside the stock market is a way healthier option for them to invest their money. But again, there are some older generation, people who have believed the market, who have believed in the market and have invested their money in the market. They have reaped multifold benefits. Benefits from being in the market for a long period of time without disturbing their investments. If you have been in the market for even for a very short period of time, and you have seen the volatility of the market, you would believe that it's easier for you to just disregard the volatility and focus on the market for a very longer period of time. See, learning about the market can help calm the fears of these investors who still fear that the market is not the right place. So once you start learning about the market, you get to know, you get to handle the fear. It calms you down more. It calms you down in situations when the market dips, and it helps you create that sense of security within you. The belief that the market would rebound back and you would still gain back the profits that you're looking for. Now, this change in the feeling can help these new investors make a financial decision in a broader sense. Now, when you're through with this, here comes the idea, the plan, the strategy. Now, this involves penning down what you have learned and chalking them to align them with the goals that you have from the market, from your investments. Now, since the goals vary, they differ for different people, this process can be different for different people. Now, having said that, it defies the very age-old investment philosophy, which says, stay the course. But does that mean you cannot change? See, the more time you spend in the market, with time, you will learn more, and with time, as you start achieving your goals, you will set new goals and your goals will change too. This happens because when you start being in the market for a longer period of time, you start realizing what's working for you and what's not. When you're new in the market, you might start off with easier ventures like mutual funds, maybe index funds, maybe value investing, to choose some stocks and bonds and portfolios and build up a portfolio for yourself. Maybe reach the first 1 crore, 2 crores by yourself. And then when that becomes big, you become busy in your life, you grow old, you become busy in your life. It's probably at that point of time, it becomes very much evident that you put this corpus or give this corpus to someone else to manage, maybe a professional PMS team. That's how things work in the market. But you need to get your hands into it first. You need to get your hands dirty first. Put your hands on, understand this, understand the game, understand what it has to do. And then when you have built something for yourself, when you have done the hard work, and then you can hand this over to someone who can manage it. A bigger team, a bigger, reliable team. And if you do not want to do that, if you start taking more interest on it, probably you might quit your job. Probably you might quit the full-time work that you're doing and completely indulge yourself into this market. At that point of time, you'll have a huge sum of money to manage all by yourself. And probably you might not want to hand this over to somebody. You might feel it's more comfortable for you to handle your money, to manage your money all by yourself. Adapting yourself to the market, to the changing situations. Overconfidence and fear are the two most damaging forces in any investing world, and it's pathetic for a portfolio of any size. But no matter which direction you go, you either manage your portfolio all by yourself or you appoint some skilled technician or maybe a skilled PMS portfolio manager to manage it. You still need to assess your plan's effectiveness from time to time. Now, doing so, there is something very important which you need to take care of. Do not forget your long-term goal. Don't forget the bigger picture. Chances are very likely that you might have to weather the downturn of the market in between a number of times, but still your focus should be there. Your focus should be on your long-term goal, because what works for you at 30 will not work for you at 60, or may not work for you at 60, may not work for you at 50 or 70. So things change, situations change, investments change, investment opportunities change, and your age changes. So everything you need to tackle, you need to see the effectiveness, how it's performing against what you're feeling, what your requirements are at that point of time, how far your goals are. Do you still have the goal that you have set for yourself maybe 10, 15 years back? Do you still need that goal, or has it changed? And now, as we all know, when you stay in the market for a longer period of time, the compounding effect takes in place. This is an amazing thing. I think you can learn about the compounding videos. There are tons and tons of videos on compounding and how compounding works in the market. You can learn about compounding from any of these YouTube videos. But you should take advantage of this phenomenal mathematical formula that works in the market and put it for your use to multiply your portfolio. So I'll just briefly tell you the numbers. I have it here. It says approximately if you can manage to invest around 25k a month, which gives a mere 12% returns, it will give you a net corpus of 1 crore in 14 years. Approximately around 14 years. But what's amazing, the amazing thing is, it might took 14 years to build the first 1 CR. The next CR from 2 to 3 crores, or maybe from 1 to 2 crore, it will take approximately around 5 years. It takes 5 years to get to the next crore. So your net worth is now 2 CR in 19 years approximately. Surprisingly, the third crore would take even less. It takes around 3.5 years. The fourth one would take 3 years, the fifth one would take 2 years, and the sixth one would take a year. Just imagine, the seventh, eighth, ninth would take months. It'll take months, not even years. So it's always the first ones here that is the most difficult thing for you to achieve, and that's where most of us, many, would quit the market, would move out, would seek some other opportunities which would give some quick bucks and so on and so forth. But let me tell you, if you can ride this first 14, 15 years patiently, have patience, stick on, hold on to whatever is happening. If you can get approximately around 12, 13% returns, which you can easily get from the market, and if you can invest around 20, 25K, whatever, somehow manage yourself, 14 years, you will hit the first year, and then you will not have to look down. So if there is time on your side, it doesn't matter where you are, 20, 30, 40, you still have 14, 15 years with you. If you still have time on your hand, if you still have time, start investing and put this magical mathematical formula for your good. All the learning, practicing, trading, and doing this and that can all happen while you're on the market, while you're in the journey. So don't wait for, to learn the market completely and then plunge into it. Yes, do learn it, but learn it while you're on the market, while you're on the field. So plunge in. Hope you have got a glimpse of what is required for you to be in the market. This is just the part 1 of the series. There are approximately 17 or 18 of them. I'll come up one by one. So stick on, hold on to this video, like and subscribe this channel so that you don't miss out on the next part when it comes out the following weeks. See you again. Till then, SG signing off. Goodbye.